All right. Welcome to the Happy Hour Money Podcast, where we drink beverages and chat about money. I'm your host or I guess co-host, Josh Bennett.
I'm just here for I guess eye candy, limited commentary. No. But yeah, Isaiah Douglass, co-host, and what's better than being able to chat a little bit of finance over a beverage, whether it's a coffee, beer, wine, mixed drink, whatever it is. But one of the cool things that I think we're going to chat on today is based on an article that was written called Money Lessons I Wish Were Taught at School. And so we're going to take this a little bit differently than the way that the author wrote it and kind of share things that we thought about. And we'll share the link to the article as well that you can read through. But things that we wish that we knew, whether it was in high school and college, that our parents would have taught us. There's lots to get in here. And I'm kind of curious, Josh, if you had to sit back and reflect, what would be a couple different things or top of mind? And what maybe we'll do is just, riff on a handful of topics and see where this goes.
Yeah. I mean, I think first and foremost, I think everyone out there would agree that, the financial education that we get in schools is
abysmal.
Yeah, abysmal to say. Yeah, I think that's even putting it politely, yeah. And some of us are blessed with parents that, teach us lessons, or grandparents, or, mentors, or things like that. And I, happen to be luckily one of those people that, had a lot of good influences, but not everyone does. So yeah, these are, frankly, there's a lot of lessons, but, basic finance 101 is the obvious thing, but there's a lot of information. And this is the kind of thing where we're going to deviate a little bit from, what's in the article is just, things like Roth IRAs and things like that are obviously important, but there's a lot of just bad information out there that is easily accessible now that Google and, the Dave Ramsey.
Well, TikTok is there for all the good advice and guidance, right? Like, that's just where I go.
Exactly. But so I think it's, one, some of like the basic things that, I wish we were taught in school. And I think my parents tried to impart this and, just being an idiot high schooler and stuff, never necessarily took the lessons to heart back then. But, saving early, saving often, and investing. And to me, like, I think the most valuable thing that someone can do as like a young student, as, recent grad, early in your career, your finances, is start a side hustle. Like, you don't need to start a business and like make it into an enterprise or, the next Fortune 500 company or be, the next Elon Musk or anything like that. But, I personally, from my experience, like starting all the enterprises that we're a part of now, like, all came from just a side photography business while I was a financial advisor. And the lessons I learned from starting that business, would apply whether I was still a W-2 employee. It'd make you just so much more valuable to the company because, one, you know how a company works, you know how to think about profits, you know how to think about saving, you know how to think about buying inventory or whatever the case may be with the business that you or side hustle that you create, or marketing, sales, all these different skills. Doesn't matter where you are in your career or what you're doing with your career, that skill set is incredibly invaluable. And if you become a linchpin either to yourself as like an entrepreneur or a linchpin to your company that you're employed with, that alone is going to result in so much more income than you would otherwise get throughout your lifetime. And that's one of the things that, there's only so much you can save, only so much you can budget, because there's only so much you can or want to cut out of your lifestyle. But in, the US or even abroad, like, the amount of money that you can make is limitless. If you have hustle, drive, ingenuity, innovation, all these different skill sets. So really diving in, learning those skill sets, through a hustle, I think is the best possible way that you could do.
And it teaches you skills from like sales, because I think one of the things that people don't realize, they might be like, oh, I don't like sales. And I think sales can be a dirty word, but like, especially when you have a side hustle, you might be the most talented photographer or the most talented, web designer. But if you're freelancing, you have to have some sort of ability to sell. Even if you're on Upwork or Fiverr and you're one of, the sea of thousands of people, how are you going to set yourself apart? How are you going to have the communication skills with people that may be interested in hiring you? How are you going to put together your portfolio or the way that you present yourself? It's all sales. And sales doesn't have to be a dirty word. It's not like you're trying to, trick someone into giving you money. It's like, no, I do good work. This is how I do it. This is what I stand for. And you can sell in a lot of different ways. And everyone has their own style. It doesn't have to be the same. It doesn't have to be, this hardline high pressure. And for some people that works really well, and that's the environment that they thrive in. And so for them, lean into that. But for others, it can be much more relational or conversational or, some sort of funny way to do it. And I will throw my wife under the bus because I'm thinking of a really ridiculous ad that is out for this. I think it's a fudge company that's on 69, and it's called Uranus. And it's like a child made this, and she is chuckling on the way home about this fudge company called Uranus, and it has like these little, obviously very immature jokes, puns coming up to the exit, and she's just like laughing to herself. And I'm in the back seat between our two boys, and they're asleep, and I'm like, do not wake them up. And she just thinks it's funny. I'm like, how old are you? Like 12? But again, for them, their style of selling, their style of like explaining what they do is really to play off this immature jokes that I'm sure does fairly well because enough people are like, oh, that's kind of funny. I have not been there, so it has not worked. But that is the thing that I think about with starting a side hustle or doing something outside of maybe your main source of income is sales, and thinking about how do you sell and how do you explain what you do and sell the benefits of what someone gets. And I think restructuring and reframing that. There's lots of good sales books or different things, but you can't replicate that than just doing it and failing and be like, that didn't go like I thought. I want to change that. So that would definitely be one I think to build on as well.
Yeah, and I think the sales like aspects, you can learn a lot from books, but you mentioned sales being a dirty word, and I think frankly a lot of the sales books kind of teach you the dirty word methods. Sure. But yeah, I mean there's a lot of valuable insights, but yeah, to your point, sales isn't just about selling a product or selling a service that you're implementing. Yeah, you can learn those skills through running a side hustle, but income, always revolves around sales, whether it's actually selling something or selling yourself as an employee. Totally. If you're an employee, I'd say more often than not, an employer is not going to just be like, "Hey, you're wonderful. Here's a 50% raise." But going out into the job market and selling yourself to other employers, yeah, you can get a 50% raise. Or your own employer going into their office and being like, "Hey, here's the tangible differences I made to this company. I think I am worth this. Here's why," and showing that you benefited the company. You sold your boss on why you're such a linchpin to the company. That's how you get the big raises, is by selling yourself. And yeah, the side hustle skills you get from trying to sell a product or service, you're kind of selling yourself, especially with the service side anyways. So honing that skill against different personalities and different niches, if you will, that'll go and make you wealthy, we'll say, regardless of what line of work you end up being in, just because the amount of difference between someone that does know how to sell and someone who doesn't is light years apart. You look at any salary, the ranges are huge. From like an accountant, you can have someone that's making $50,000 a year to someone that's making millions a year, just because one's good at selling, one's not. Doesn't matter their accounting skills, just...
Yeah. Well, and it can be niche knowledge too in a specific topic where no one else knows this specific area or this content, and you're like, hey, I can do this. I can be really effective at solving this issue, and there's a big demand. And I think that is another way to look at it too. But it's going to involve selling, because you could be the most talented, smartest, most amazing CPA, and if no one knows you're there, you're not going to get any business. So like someone has to do the selling, and it could be really smart, talented, bright, amazing CPA that's super awkward, no one talks to, but someone is selling for them, right? Like someone is out in front, and that could be someone that maybe doesn't have those technical chops yet, but has the ability to sell, and still super valuable because that is revenue in the door for that business.
Yeah, absolutely. And I think we kind of touched on a point too here that, and it's kind of funny, we're talking about, money skills or money things that weren't learned in school, and it's all about just skills and stuff at this point, but it's really so true. But one of the things that we sort of touched on is, I think, something that will make you ultimately significantly wealthier throughout your career is developing niche skills, developing, in addition to sales, like, again, the way you become a linchpin in your industry or a linchpin in your...
Linchpin count number 4.
Yeah. It's a powerful word, market. But yeah, so but is learning those skills and staying on top of those skills. So being a lifelong learner and not being lazy. Like our society sort of breeds you to, work 9 to 5, check that box, and then go home and watch Netflix for 6 hours. Well, if that's what everybody's doing, and you are average doing that, if you want to be above average in terms of wealth, you have to do things that are not that. It includes like going home, reading a book. Like there's a bunch of stats on like all the CEOs in the U.S. read like 30 to 50 books a year.
I think most of those stats are bullshit, by the way. I don't think that many people read that many books if you talk to the average person. But anyways, continue.
I mean, the C-suites I know, I'd say 30 to so is probably like 1 or 2 a month is probably a reasonable amount of books that, at least from what I've seen anecdotally. But yeah, I mean, stats pretty much across the board are bullshit.
I bought 50 books this year. I read how.
Well, I think reading is a loose term. I think it's audiobooks, like
sure.
In transit, and things like that.
Content consumption or information consumption. Yeah, I think that's fair.
I think constant learning, whether it's books, podcasts, whatever. I think that is a staple of high earners, high achievers.
Yeah.
So like if that's something you want to do, and it's not that hard. I mean, you and I both listen to like books on tape or I guess not tape, but like audiobooks.
Yeah, I get my cassette player in my car, throw that baby in there, and we're on the way to go.
Aging ourselves at this point, but like audiobooks or podcasts. Like I mean, whether like it can be, hey, we're walking the dogs or we're rocking our kids at 2 a.m. or whatever the case may be. Throw on an audiobook if you're just sitting there doing nothing, or if you're cooking dinner and no one else is around, like you're not spending time with your family. Throw on an audiobook. That's how you learn, and you're already occupied anyways. It's not like you're having to dedicate time towards learning.
And I think that's why podcasts and audiobooks are easier to consume, because you don't have to like carve off the time to sit and do that. And it can be something where you're walking, pushing a stroller, whatever. So yeah, to me, that's an easier way to consume content than sitting down and reading, where I think sometimes that's difficult or harder to find the time to dedicate to that. But yeah, point there is that you want to continue to kind of push and learn. And there's going to be certain things that it's easy, that it's not like it's a forced mechanism. Like, oh yeah, if I was trying to learn about computer coding, that would be forced, where I wish I would learn about that and like know about it, but I don't really want to, if I'm really being honest with myself. But I think it'd be super valuable if I could, and I had the passion and desire to learn about it. So you have to find things that naturally are easy to consume, where it doesn't feel like it's extra work. And I think that will lead you to good content to consume.
Yeah, for sure. But okay, so obviously building skills is something that can translate no matter where you are in your career. So that's obviously a valuable thing for people. But what are some of the, I guess more traditional financial mechanisms or tools or products or whatever or lessons that you wish you had known earlier in your life?
Well, I think you talked about one that is interesting, is about like saving early, right? Like people hear that, and it's like preach, but the data shows that people just don't do that. But I think one of the biggest misconceptions is the idea of like what is money, and actually understanding, okay, if we're spending so much time to get this thing, like what actually is it? And people don't really, I think, wrestle with that question very often. They don't think about what is money, and there's specific, there is a What is Money show with Robert Breedlove that is fantastic, that really dives like super deep, sometimes like way too like meta for even me to get into, but it is really, really interesting. But I think the idea of the system that we live in today is a credit-based system, right? So you have money, you get paid, it goes into your bank account, and then it gets lent out, right? So every dollar that goes in that bank, $9 are basically then loaned out. And so the way that new money is created is through debt. And so the idea of a credit system, I think a lot of people don't understand the way that the kind of the financial system is structured just from that standpoint. And they think about, they're told from, and I know we've picked on Dave Ramsey a couple times, I'm sure we'll pick on him like all the time, but the idea of like, oh, you need to pay off all your debts. Yeah, if you have credit card debt, absolutely. That is something you have to get under control, because that will absolutely devastate you from the standpoint of, 20% APY that is just eating away.
Well, I would even argue that that's a maybe, but I'll dive into that here in a second.
Yeah, so... But the idea of, oh, I really need to pay off my 3% fixed 30-year mortgage and then do other things does not make any sense. And I was just actually listening to a podcast on the way in before we recorded this, and that was something that someone was asking, someone that's a professional investor, like for advice, and he worked at a big bank branch, I can't remember, it was one of the national ones, and was like, well, yeah, I'm going to invest once I pay off my mortgage. And he's like, whoa, what? And he started explaining to him how inflation works and the credit system, and like, his fixed rate mortgage in this environment is actually really, really a positive thing, and he'll be paying his mortgage back with, inflated dollars, and it'll actually be worth less and less into the future, and that debt kind of gets inflated away. And this guy, again, works in banking, so you would think, oh, he knows what's going on. Young kid, again, but had no idea, and was like, oh, never thought of it that way. And I think most people that even are high earners just don't think about it that way. And so I think the idea of like, what is money, and trying to really dig and wrestle with that a little bit is great. And I'll leave that kind of tangent, and we'll kind of pick it apart a little bit more, thinking about money in general is just a storage of your energy. So when you go to work, even if you love your job, and hopefully you love your job, even if you're self-employed, hopefully again you love your job, but you're spending time away from friends and family, hobbies, and when you get paid from either your employer or your customers or whatever, clients, that is basically just energy that is being stored in that money for deferred, delayed consumption down the road to pay for the new home or a vacation or a car or all those different things. So the idea of like, what is money? I think the easiest way to think about it, and a different way to think about it, is it's just the way that you store your energy that you've already expended for someone else.
Yeah, I think that's a great way of putting it.
Yeah, and that's coming from other people. It's not an original Isaiah. Even though it sounds very, again, you can sound really smart if you listen to other really smart people through learning, right?
Yeah, exactly. No, I mean, I think that's a super valuable point. But I think piggybacking off that too, if you understand the systems, you can also question the systems, and I think that's an area where people end up being kind of sheeps for slaughter in this world, is by not understanding how the system works. And if you understand that we are a credit system, how money works and things like that, you can actually really start to see things like, and peel back the onion of like housing and all these different expenses in your life, and really start to save money. Let's look at a couple different examples here. So like debt. If you understand the credit system and how debt works, you understand how interest rates work against you, well, then you can also play them to your favor. So, for example, a 3-year mortgage. Well, yeah, pay 3% and only pay 3% and invest the rest of your money, instead of putting it in your house and make 8 or 9% plus inflated dollars. Well, you're coming out ahead. Well, okay, that's your mortgage. Well, look at another debt. Let's look at credit cards. Okay, well, if you're paying 20% to buy an Xbox, that's not a very valuable use of 20%. I forget the exact stats, but you'll end up paying, like, instead of $500 for an Xbox, if you just make minimum payments, you'll pay like $800. Like, that's how you become poor real quick. But let's say I'm starting a business and there's a 18-month 0 APY credit card. I started Vincere with a 0% APY credit card. I started my photography business with this. And like that was I couldn't go get traditional bank financing, but I could open a credit card with $15,000 and 0 interest rate. All you have to do is then hustle to make sure you pay that off before the interest rate kicks in. But
totally.
But by understanding that, you're able to work those systems to your favor. But also like understand like people's motivations in this world. Like, so let's look at some of the things that are kind of working against you. Like the real estate, is obviously a big topic right now. But when a real estate agent tells you, oh yeah, the housing market always goes up in San Francisco. Okay, well, if you understand how the system works, you can say nothing always goes up. The real estate agent is saying this, one, because maybe they're not knowledgeable in the history, which sadly is probably the case with a lot of agents, but it also could just be, hey, they know if I spend more on this property, they get a larger commission.
Yeah, they just want the deal closed because that's how they get paid. So
yeah, they're not working in my favor. But if you know how these things work, you can see people's incentives, you can understand and protect yourself against these. Yep. Same with even things like college education. I'm a big proponent of really thinking through whether college actually makes sense for you.
I love that point.
Because basically you look at the system is built to basically turn you into a college educated person, whether it makes sense or not. But like a liberal arts degree in our country has 0 ROI at this point. And for like 99% of colleges, Harvard and Yale and stuff may be the one exceptions.
And that's just because of the connections you have, not because of the actual education.
Yeah, exactly. But the teachers and the education system is measured and incentivized for you to go to colleges and go to good, expensive colleges. Doesn't matter what your salaries and things are after college and how much income you're making after college. All they're measured on is getting you there and getting you to pay for the expensive college. So thinking through like, hey, maybe I skip college and go to this coding boot camp and learn how to code and get a $300,000 salary at Meta. Or maybe I go be a welder, which, believe it or not, some of the wealthiest clients I've ever had were welders. Yep. So like, you can make significant amount of money doing blue collar jobs,
and there's a lot of people that can't do blue collar jobs, that can't work with their hands, that will gladly pay you, that are well off, right? Like even locally here in the Indy metro area, I know someone that's a plumber that owns his own business is pulling $300,000 a year, and he has a business that's really strongly cash flowing, right? So it's like, shoot, has some employees, has a truck. It's not glamorous, but that's a pretty legit income in Central Indiana. So like there are really good opportunities for, I think blue collar work. And the incentive structure around college is not, hey, we want to come alongside you and make sure you get paid, and so that there is a good, return on your investment. It is, literally just getting you through the system. And there's no incentive to control costs because the federal government will give loans to anyone from that same money. They'll find a way to get you the money. So there's no incentive or cost pressure to say, hey, maybe how can we be a little bit more efficient and bring costs down? No, costs go up in education because it's just you typically poorly ran institutions from the standpoint of like trying to control what they're spending on. It's just always bloat and bigger and more and stuff that doesn't necessarily matter. So
and one of the things too is a lot of how economic policy and stuff is driven throughout the U.S. and the world actually is, there's a belief in economics that this the stronger educated the population, obviously the higher growth potential. But the way they measure education is based on traditional K through 12, college grad, PhDs, masters, so through the system. But we're in a time period now where you could have incredibly educated plumbers that are that hone their craft through watching YouTube videos and studying books off Amazon or whatever. Like knowledge is so widespread that you don't necessarily need the traditional system. And like I've known a ton of people that are making just ridiculous salaries and ridiculous options packages working for the big tech companies that did a 12-week boot camp and just got really curious about coding. And, the tech companies don't care if you have a degree from MIT. I mean, I'm sure it helps, but all the interviews are, hey, can you solve this code? Oh, you can? All right, wonderful. Welcome aboard. Mm-hmm. So I think our economy is going to be switching to that sort of mindset of value versus what degree do you have on the wall? Because there's a lot of idiots from Harvard, just like there's a lot of idiots from every school.
Yep.
So I think, circling back to kind of the main point, if you understand how the system works, and it's really not that hard to read. There's a couple great books, a couple great, videos or podcasts or whatever out there that can really unravel a system for you. But if you understand how the system works, you can start to see people's incentives and really, protect yourself against the marketing plans, protect yourself against bad incentives that aren't good for you and the life you want to choose and the wealth you want to build.
Yep.
But yeah, so what are some other topics that you think are sort of
I think the idea of real returns versus nominal returns in investing is important, and we talked about this, and it'll get brought up, I'm sure, lots of other times, but the idea of real returns being, okay, after taxes, inflation, and fees, what do I actually have, versus nominal is what did my statement say that I made. So you've talked about, save early and invest, and I think part of the reason that we have to invest is because fundamentally the money that we currently use, fiat currency, is broken. And again, we'll have conversations around Bitcoin and other things in the future. But to me, that really needs to be understood more, where people need to understand what are real returns. What am I actually making over and above this? Because at the end of the day, the only thing that really matters is my purchasing power growing, or is it shrinking? And if I'm going to hold cash and just try to save my way to whatever I'm trying to get to, it will always be shrinking. That is a guarantee that it will be shrinking. Versus, okay, if I go and put my money at risk, which you're kind of forced to in the environment that we're in, okay, what does that look like? And then, how do you measure risk? You can fail fast, you can fail slow, but at the end of the day, the goal is you have real returns that you actually are being able to compound your wealth over time. So I think that is absolutely one that needs to be understood better. I think one of the other ideas, and again, I think some of these concepts will like really pare back and get into more into the future as well, or will get brought up in different conversations. But the idea of, same thing with compounding. So, the last 10, 12 years, take away, 2022 and the rough start for the S&P 500, it's been a fantastic environment for U.S. stock investors. So there's a company out there called Resolve Asset Management, and they basically did what is considered like a bootstrapping return. So kind of running a hypothetical of all these different kind of paths that could happen over a 10-year period. And from 2009, so right after the great financial crisis, through 2019, the S&P 500 could only have performed better over the last 100 years 4% of the time. So it was like the golden age. Like this decade was fantastic. And so for a lot of people, it made a ton of money, which is great. But it's like, okay, going into the next decade, do you think that that's going to be sustainable? And, that's been a conversation we've had lots of times with different people. But the idea of compounding returns and losses. So if you shoot the lights out, great. But if then you all of a sudden have the floor fall out from under you, like what are you compounding over, 5, 6, 7, 10, 15, 20-year time horizons? Because most people say they're long-term investors, but then they're looking at something 6 months in and saying, ooh, this isn't good. I don't like this thing. It's down. Okay, well, why did you own it and understand the rationale? And then maybe there is something that you need to change, but a lot of times you probably just didn't understand why you owned, said investment or said thing in the first place. So the idea of being down 50% and then being back up 50%, you're still a net negative. Like you're not positive. So understanding that and not having the envy of always having outperforming investments every year, but the idea of like the diversification benefit, you're always going to say, ooh, I should have done 100% in that thing, and being like, I didn't make as much money or I lost some money. And we have a good study and good things that shows like even from the beginning of 2000 through 2021, it's like you can have a diversified portfolio where you never outperform the S&P 500 over 3, 4, 5, 6 years. But it's like consistently over that time, you actually come out ahead. And that's wild because people don't ever feel like they're ahead. And so that I think is a combination of a couple different things, but definitely something that more people need to understand and sit with.
Yeah, I think something to really understand along that lines is that investing is very similar to weight loss in a lot of ways. Like, I don't know if you guys remember the show The Biggest Loser, but I forget the exact stats, but basically, I think it was like 95% of the people that went on that show ended up gaining all their weight back. But the people that are successful with weight loss are the ones that build lifestyle changes that stay consistent over time, right? So in investing, it's very similar where, consistency of compounding trumps intensity. So like on Biggest Loser, you had this very intense, 3 months or whatever it was of just, extreme weight loss, but you can't do that in real life. So people gained everything back. Whereas same with investing where you can have years like we've had the past 2 years where, shit's just broken and looks really wonderful on paper and people are making tons of money. But that's the exception, not the norm. You need the consistency year after year after year. Like investing should be boring and it should be long term. If you're trying to any get rich quick schemes, they're all bullshit. Like there is no get rich quick scheme other than maybe
insider information or something.
Yeah, insider information or starting a business that happens to just blow up right away like that. And that can happen, but also is not an easy path by any means. Like there's no thing that just is like, hey, I'm going to be a millionaire tomorrow. Like if that happens, it was pure luck or you are one of the hardest workers on the planet. Like that's, and mixed with a little bit of luck. So I think really understanding that I think is really important too.
Yeah. And I think one of the key things is luck is going to play a factor with anything, but I think there's a saying, it's like the harder I work, the luckier I seem to get. And like, there's some truth to that. It's like, you have to go out and have opportunities and, one of those may hit and that could be the big thing, the big turning point for you individually, your business, something else. So that's definitely something to think about. I think one key thing haven't necessarily got into, but like just material items, you'll consume things and there'll be certain things that are meaningful that you'll get. And I would always encourage someone, higher quality is better. And I think in today's world, it's hard to find high quality stuff that's not expensive, but there are certain things that you can reach for and get nice, high quality things that will last for a lifetime. But so many different things, like you get it, new car, unless you're a huge car person, that fades very quickly. And it's like, you're just accustomed to it. And it doesn't matter nearly as much. And going back to kind of what we do from a day-to-day perspective, right? Talking to people about money and helping them make, really good decisions. It's amazing how many people, when you ask them like what they actually want to accomplish, it's not more things. And a lot of times people will start to realize that maybe later in life, but there are people that chase that stuff. And I would just highly, highly encourage someone, really ensure the things in the lifestyle that you live is something you want and not, the putting it on for someone else. I know you have a great story of that from when you were thinking about what you wanted to do out of college and going and kind of shadowing some people out in California. But like that whole idea of like material items will fade and that material wealth will fade. And it's like going back to being things that are sustainable and things that you truly, truly care about and or are, beneficial. So.
Yeah. And I think too, kind of thinking about that, like, I mean, and it's okay to want nice things. I think that's something that's
100%.
often overlooked in finance, like where it's like, hey, you're told, hey, just budget, cut money, et cetera. Like, no, it's okay to want nice things. Like, for example, like, I look at two name brands, like, for example, like Gucci. Like, I don't see the appeal. Like, to me, a Target T-shirt is just as comfortable as any, shirt that cost, $80, $100 or whatever. Like, I don't see the appeal of impressing people with that, right? But, when it comes to like watches, like I wear a Rolex, but at the same time, like reason like this thing will last me my whole life. I'll pass it down to my kids. Like, this thing is going to last, hundreds of years, and whether it's, I have to resell it, it'll retain its value. Like, to me, like that's, you call it an investment, but like, I mean, I have, for example, like I have a family watch that's been passed down. It's like a pocket watch that was passed down from like Civil War times.
That's awesome.
Like, yeah, it's several hundred years old, which like is super cool. Like, never going to sell it and not worth anything, but just like the sentimental value there, and like being able to do something like that for my kids and pass like that on, I think is a really cool idea. So like, I'm a big fan of watches for that reason. And so like, and I also enjoy like nice cigars and nice scotch. Like, that's okay. But but really understanding, to your point, like what are the things that do either bring tangible value for you? Like, okay, hey, this shirt is worth investing, $80 in because it'll last me, 5 years, when the Target shirt will last me 1 year, or whatever the case may be. I'm just, using an example here, but if it has like value because it's worth spending just because of the durability, or if it's just like, hey, this just brings value to my life, even if I can't put a dollar figure on it, it's worth spending that money. But really understanding that, like, what brings value one way or another to my life, and not, and I think this is the key point, not doing it just to impress people. Like, there's a lot of studies that show this, but also like, I think anyone listening would realize that, like, hey, trying to be an Instagram influencer or trying to do all this shit, like you're just basically trying to impress a bunch of people that you probably don't even like or don't even know.
And they probably don't even care about you or think about you at all. So like, who cares?
Yeah, exactly. Like no one's going to remember any of the clothes that you're wearing, like outside of maybe an hour after you leave the room.
Yeah.
And so it's like, why spend this money? Like maybe to, impress or, be part of the people you care about, but again, just really understand why you're making the decision you're making, whether it's marketing, outside influence that really don't matter, et cetera. Like that's what gets people in trouble, is trying to keep up with the Joneses. And it's a really stupid mindset.
Spending money on high quality things. Let's actually answer areas that we would spend more money on things for higher quality. Two things I always talked about is your bed and your shoes, because you spend a lot of time in both. So I agree with that. I think that makes sense. Furniture. I think a lot of furniture, like, IKEA is great, but at some point you might not want shitty furniture and stuff that can actually last. That's actually like real hardwood and like actually has some craftsmanship behind it. I think is something that, is money well spent. But yeah, I'm also not a car guy. So to me, it's pretty easy. Like, I drive a Kia, I drive it till it is destroyed. And at one point in my life, I felt like, I have to have a nicer car to impress people. Right. But it's like, no, you really don't. And I think that changes over time and will evolve. But what about you? What are one or two things that you're like, yeah, it's worth spending money on that stuff?
Some things like, alcohol and experiences, I think are like one, like totally. two of them. Like, so I'm a big experience guy. So like, whether it's a nice restaurant or, good scotch, but like, or good cigars, like to be one of the, my favorite times is, sitting down with close friends and having a cigar and having a good, cocktail or whatever, just because, to me, I value like close relationships, and even though that's a material thing, some of my closest friendships were built on having a cigar together, just because you're sitting there and forced to talk to each other for an hour and a half because you're smoking a cigar.
Yeah.
Like there's nothing else to do
it's not a quick experience.
Yeah, and so like just the slowing down and enjoying that experience has been super valuable in my life. So that's something that's always been worth spending money for like, I am a car guy, so like, that's, when I have the money to do that, that'll be a nice thing. But other than that, I mean, that's like clothes and stuff I never really saw the value on spending money on. My wife, is a big proponent of this, and I've seen sort of like, as I've gotten more into cooking, I've seen the value of this too, but like buying good, like cookware, like
and even the food that you prepare too, like high quality food.
Yeah,
that was something that I was like, oh, should have mentioned that too.
Yeah, and like furniture, yeah, I want comfortable furniture, but as I'm sure you see with your kids too.
Yeah, you got to get it later when they are not going to. So I got to add that tangent there. Like we are not spending high dollar on furniture at the moment with a 4-month-old and a 3-year-old. Like I know it's all going to get wrecked.
Like I think our couch is maybe 6 months old and already looks like it's 20 years old just because of dogs and kids and stuff. So I mean, yeah, like that's at least the things that are coming to the top of my head.
Yeah. Two other things that I had written down when I started thinking about this is the idea of, inflation being theft or taxation that is kind of never really passed or discussed or no one really thinks about it. I think that's one. We've talked about inflation before. I feel like if people understood kind of the insidious nature of inflation, they might stand up and say, I don't like that, because people get pissed off about taxes, right? They see that. You got to pay them and all this other stuff. You don't see the impact of inflation nearly as much. You might feel it. I think a lot of people feel it, especially right now. But that to me is one that if more people understood, they might start asking more questions. I think it ties back into the money and the whole credit system and all that other stuff. And then dividends. Dividends have such a beautiful marketing and brand and story. And a lot of times, dividends can be nice, right? So if you think about the total returns of the S&P 500, dividends make up about a third of them. But so many people get so obsessed with, I want dividends, I want mailbox money, I want these different things. Well, my grandma did this, and they got all these checks, they made all this money. But sometimes it's like, that doesn't necessarily make sense, because when companies pay out dividends, you are forced to pay taxes on those dividends. And like, do you actually need the money today, or are you trying to, again, what are you solving for? And I think those are two of just random ones that have come up over time that I'm like, I think dividends are one that I started kind of my investing journey with, like, I'm going to find these dividend payers, and they're these dividend champions, and they pay dividends for 25 years, and they raise their dividends, and you just got to buy enough of these, and then you can just retire, and it's amazing.
Yeah, and I think one funny thing with dividends is, again, questioning kind of what are the incentives and motivations, and what are these things. Well, one, a dividend, like you said, it's taxable, which sucks for you as the end user, but also a dividend is basically a company just has cash that they distribute to you, right? Well, what does that mean? It means the executive board was not creative enough to find a better use for that money. So they're like, might as well give it out to the shareholders. So if the company is, or the executive board is smart and innovative enough to reuse that money, you can be damn sure they're going to reuse it and grow that company. So basically you're buying companies that are essentially just, on their last leg, or have really bored, scared exec boards that don't want to take risks because of their career or whatever. And so like, you could get some, fairly okay growth. Like, I mean, Coca-Cola does a good dividend and has consistently grown, but there's only so much you can grow unless you're innovating in the company. And I think that's a really interesting thing, is that people don't realize is like, hey, it just means that they couldn't find a better use for it.
Yep. Yeah, I think that's a good point. And there can be mature companies where it's going to be, slower growth anyways, but the dividend can kind of keep up. And I get the appeal, and it makes sense. But yeah, that's a really good point. If they have excess cash flow, they're making a decision of, okay, do we go and repurchase shares, so lower the float of the kind of outstanding shares that are out there, and that would boost hopefully the share price for existing shareholders. And when they do that, there's no tax ramifications for you as the holder. So I think that idea of like share buybacks is something to understand and think about as well. But there might be, and there has been lots of cases in the past where executive teams and boards have went out and acquired companies that they shouldn't have bought and way overpaid and bought at the worst time. So you can make the argument either way, like, hey, maybe if they're good, I think that's the key thing. If they're good and they're making strategic acquisitions and making decisions that make sense to, grow the brand and the business to sustain that dividend over time, that to me is like kind of a nice mix. But just looking at, juicy dividend, this must be a good company, that is something that I think far too many people fall in that trap and don't think about the other aspects and components of that business.
Yeah, but I mean, I think the key difference between growing the dividend is that, again, a lot of people don't realize, to your point on like real versus net returns, is a lot of the dividend is just basically growth from inflation, because they've increased prices because of inflation, et cetera, and so therefore they can, do a little bit more dividend. But there's some margin of profitability in there. But yeah, I mean, a lot of it is just, to me, if you have a creative exec board or an innovative exec board, there should be no reason to give a dividend other than, hey, I don't want the career risk, or like I don't want to buy the wrong company because I'm scared to do the work to see if it can fit, et cetera. Like so, but yeah, another one that, kind of parting one that I have is 401ks. Like to me, 401, actually, well, and robo-advisors. Those are kind of two other ones that, I guess robo-advisors and modern portfolio theory, which we've done a whole conversation around modern portfolio theory, but that's something that, we're taught in school, if we're taught in school, or at least taught through all the blogosphere or corporate finance, that, hey, I just need to buy stocks and bonds and change the bonds as I get with age. Well, as we've kind of talked about in the past, that is not really good advice. It's easy to sell, and it's easy advice to, fit my financial, or, insert, companies' financial products into, which is why it's gained such traction. But that's one of those, okay, question the model, question the incentives. And yeah, if I'm a Vanguard that sells low-cost index funds, of course I'm going to preach, that the only thing that matters is fees. Mm-hmm. No, it's not. The only thing that matters is quality investments.
Yeah, net returns.
Yeah. And so, like, really understanding that the incentive there is just as a marketing ploy is all it is. It's a sales tactic. But same with, like, that kind of transition to the 401k where, like, you're basically told, hey, save in your 401k. That's the best place to do it. Save a cup of coffee worth of money into your 401k each day. Don't go to Starbucks, et cetera. Well, yeah, your 401k is a good tool. Like, we're big proponents of Roth 401ks, but same idea here is that the investments in most 401ks are crap. They're expensive mutual funds that don't give you better net returns, and you don't have very good options. Like, they may give you 20 different options, and you can't touch that money until your retirement age. So say you're a millennial that wants to travel the world, or you want to, invest in rental properties, or you want to invest in a lake house, or whatever the case may be. Like, you're trying to build this lifestyle that you want. A 401k is basically saying, I'm going to defer my life until I'm 65 or 59 and a half.
Yep.
So, I mean, you're deferring this lifestyle to you're potentially too old to enjoy it. Whereas, like, that's something that, we believe that there's ways to invest. There's obviously trade-offs where, tax incentives and things like that, but there's ways to invest that allow you to capitalize on your assets, today or in the not too distant future, as opposed to only going to use those when you're in retirement. And I think but again, the system that we live in and that, kids are graduating into is built around, like, hey, we want you to be in the workforce till you're 65 and then take Social Security, Medicare, et cetera. And so that's why it's, very 401k driven. They don't want you to be independent at 35 because then you're not part of the cog paying into Social Security.
Yeah.
Potentially. So long story short, rethinking through, is a 401k actually make sense for me and the lifestyle I want to create? Like, I think that's something that's basically blind advice that every guru gives, but it's really potentially not good advice.
Yeah. I would say, if you have 401k and they're giving you a match, absolutely at least save up to that and then question everything else, because that is part of your comp structure and what they're going to at least give you. So take the free money, even if the investment options are subpar. But to your point, a lot of the 401k plans now are pushing towards, hey, market indexes, very passive from that standpoint. And there's tons of interesting, and going back to, like, continue to learn, there's lots of people that have done some research on these different areas of, okay, right now, 401ks are automatic buys every 2 weeks or, twice a month or whatever. And it's going in all the same kind of passive market-based indices. And, like, flows are driving the returns of those things. Well, what happens when the flows turn the other way? And Mike Green has done a lot of work on this. And, he had a podcast, it might be 18 months ago, was one of the podcasts I was like, holy smokes, this is incredible, some of the things that were being said. And I don't agree with Mike and lots of other things. So maybe there is, a bent to, he has his own, marketing push for certain things that he does and what he's behind as well. But I think there's some merit and there's some truth to that. But yeah, typically in 401k, you have stocks and bonds. So the way that we typically look at it is like, okay, let's get our stock exposure there. And we're going to kind of ignore the bonds, especially for someone that's younger, because right now that's not necessarily going to be super helpful for you. Now, again, disclaimer, right? Like, your situation may be different, blah, 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 all that good stuff. But at least just say, okay, my broad market exposure in my 401k is going to be stock market. Maybe some U.S. stocks, some international stocks. If they have emerging markets, great, cool. You don't need to then go in your Roth and your taxable account and all those other things and buy the exact same thing. And I think that is the biggest thing that we see when tied into like robos. Like they're taking the exact same exposure and duplicating it a million times, where times are good, it looks great. All of a sudden times aren't good, and you have one bet, and that's the U.S. stock market. And you're like, oh, but I have 15 or 30 different holdings. It's like, nope, you have one holding, and it's called the S&P 500. And so as long as the market does well, you'll do well. But yeah, for most people, they don't see that until it is, period like right now where, hey, I'm down 20%. What happened? It's like, well, you got to understand what you kind of own. But again, going back to the education piece, no one taught anyone about this stuff. They see different line items and they think I'm diversified.
Yep.
And I think that is a misnomer too. You could have 2 holdings and be more diversified than 30 different holdings in a 401k.
Yep.
I think that's the hard part for a lot of people to get their mind around, because they're not taught that, and maybe they don't have the interest, but no one spent the time to come alongside and say, hey, this is kind of what's going on, and this is how you can look at what exposure you actually have.
Yeah, exactly. Well, I think the moral of the story is that our education system sucks, and
burn it down.
Yeah, you need to rely on your own self-reliance to be successful in this world. Which I think there's a lot of truth that hopefully one day, financial literacy in our country changes by. And I think we're seeing some good things coming up from the grassroots to make change within the education system. But any parting thoughts or words of wisdom along these lines before we sort of close out? Yeah,
I would say thinking about like just finances in general don't get discussed much around family and friends. It's sometimes a taboo topic. You don't necessarily need to be like, oh, look how much money I have and this and that. But I think having discussions around just money in general and learning from each other and people, especially that you trust. And now sometimes you're going to get terrible advice from them. So you want to like obviously check with what that is. But I think starting to have more of these conversations so that people can learn and you can share that information with others. And again, that's kind of what this podcast is about too, right? Is sharing that information in an approachable way. So start having those conversations. Don't feel like it can't be discussed. So that would be kind of my advice there.
Yeah, agreed. Especially like career-wise. Like I think this has been super valuable for me in my career is like, talking about salaries, talking about growth, things like that. To your point, everything you talk about, you need to take with a grain of salt, because there are a lot of idiots out there that think they know. I forget the Dunner-Kruger method or whatever, where basically like the more confident they are, the less they know. But so like for example, like one thing to do would just be, all right, if you're talking about investments with your friends or talking about how to invest or trying to learn. Well, if they say, hey, buy this stock or whatever, okay, an easy follow-up question is why? And if they can't explain it or explain it coherently, then maybe you should do your own research. Like you could still take like, hey, like, okay, buy Tesla.
And it could be a great recommendation.
Yeah.
Or they could just be lucky and it pops and something happens. But for the most part, individuals should be recommending specific stocks, because there are more CFAs per publicly traded companies than any other. Like that ratio has never been more in favor of how much information and how much stuff people can study it. Like unless you're moving into the micro cap, which a lot of people will call penny stocks, like that's where you can actually like dig in and run some numbers and get financials. But there's not a lot of liquidity where it's difficult and it's tricky, and you have to be a long-term investor and dig in. But saying, hey, Amazon's a better buy than Apple, like, dude, that no one, you don't have any inside information there. I promise you. There's no inside that is going to like move anything or make an adjustment.
Yeah, exactly. So take all the advice from your friends or family with a grain of salt, but still having these talks and conversations, again, I think and being open to learning, open to doing your own self-research, like that, I think will go a long way. But just getting rid of the stigma around financial education. There's a way to be it without being a douche and showing people how much money you make, but really trying to learn from each other and get rid of the stigma.
Yep. I think that's a great place to wrap it up. And thanks for tuning in. And we look forward to chatting again next time. Cheers.
Till next time. Cheers.